Ethereum has captured significant attention from institutional investors. Last week, an impressive $321 million flowed into Ethereum investment products. This marks the largest single-week inflow for Ethereum since December of 2024. Such a substantial movement of capital is a clear indicator of growing interest. It suggests that large-scale investors are increasingly confident in Ethereum's future prospects. This particular inflow has certainly turned heads in the financial community. It highlights a notable trend in the digital asset space. Many are watching to see if this level of investment continues. The market is keen to understand the drivers behind this surge. This recent influx is not an isolated event for Ethereum. It actually extends a remarkable streak of positive investment. For 6 consecutive weeks, Ethereum has seen funds pour in. Over this sustained period, the total amount invested has reached $1.19 billion. This consistent pattern of inflows paints a picture of enduring institutional belief. It is not just a fleeting interest but a more prolonged commitment. This steady accumulation of capital underscores a strengthening position for Ethereum. Investors seem to be strategically increasing their exposure to this leading digital asset. This trend is vital for Ethereum's long-term growth and stability in the market. These strong capital inflows are more than just numbers, they signal a powerful shift. They indicate a growing bullish sentiment surrounding Ethereum. Renewed institutional confidence is a key driver here. Ethereum is the second largest cryptocurrency by market capitalization. This significant backing from large investors can fuel further development and adoption. It also suggests that institutions see Ethereum as a valuable asset for diversification. The sustained interest points towards a belief in its underlying technology and potential. This positive sentiment can create a self-reinforcing cycle, attracting even more investment. Furthermore, some market analysts are observing a noteworthy change in investor preferences. There is a suggestion that institutional investors might be shifting their focus. This shift appears to be moving towards Ethereum and away from other major digital assets. Bitcoin and XRP, for instance, have seen different flow patterns recently. This potential reallocation of capital could have significant implications for the broader crypto market. If institutions are indeed prioritizing Ethereum, it could lead to a rebalancing of portfolios. This trend warrants close observation as it could reshape market dynamics. Ethereum's unique features and upcoming upgrades might be contributing to this shift. The broader digital asset investment product market also experienced positive movements. Last week, the market saw a total of $286 million in inflows. This indicates a generally positive sentiment across various digital assets, not just Ethereum. When looking at a slightly longer time frame, the trend is even more pronounced. The cumulative inflow total over the past 7 weeks stands at a substantial $10.9 billion. This consistent flow of capital into the digital asset ecosystem suggests a resilient investor appetite. Despite market fluctuations, institutions appear committed to increasing their allocations. This is a healthy sign for the overall maturity and acceptance of digital assets. However, despite these recent inflows, a curious trend has emerged. The total assets under management for digital asset products actually decreased. It fell from a record high of $187 billion to $177 billion. This dip might seem counterintuitive given the positive inflows. The primary reason for this reduction is attributed to price pullbacks across the market. Additionally, renewed market volatility has played a significant role. This volatility has been partly driven by uncertainty surrounding U.S. trade policy. These macroeconomic factors can significantly impact asset valuations, even when new money is coming in. It shows the market is still sensitive to external economic pressures. Looking at regional investment product flows last week, distinct patterns emerged. The United States led the charge with significant inflows, totaling $199 million. This demonstrates continued strong interest from American institutional investors. Hong Kong also recorded a remarkable week, with $54.8 million in inflows. This was its strongest week since the launch of its exchange-traded crypto products over a year ago. Germany also attracted considerable investment, with $42.9 million in inflows. Australia saw a healthy $21.5 million flowing into its digital asset products. These regional figures highlight a global, albeit varied, institutional engagement with cryptocurrencies. In contrast to Ethereum's positive trajectory, Bitcoin investment products experienced a different outcome. Last week, Bitcoin products saw net outflows amounting to $8 million. This broke a 6-week inflow streak that had previously accumulated an impressive $9.6 billion. The reversal in Bitcoin flows was partly influenced by market uncertainty. Specifically, a U.S. court ruling on tariffs contributed to this cautious sentiment. Notably, BlackRock's iShares Bitcoin Trust recorded $430.8 million in outflows on May 30, 2025. This ended a 31-day inflow streak and was the trust's largest single-day outflow. XRP investment products also registered outflows of $28.2 million. Currently, Ethereum is trading around the $2,482 mark. This price point comes after a period where ETH has been moving mostly sideways. This consolidation phase suggests that the market is searching for a clear direction. Buyers and sellers are in a state of relative equilibrium. Significant news or market shifts could potentially break this sideways pattern. Investors are closely watching for signs of the next major move. The current price level is a crucial point of observation for technical analysts. Understanding the nuances of this range is key to predicting future movements. This period of relative calm can often precede more volatile price action. Examining Ethereum's 1-hour chart provides more detailed insights into its short-term behavior. ETH appears to be range-bound, fluctuating between approximately $2,475 and $2,555. The Bollinger Bands on this chart have narrowed considerably. This narrowing typically indicates reduced volatility in the immediate term. It often signifies that the price is consolidating before a potential breakout. The Relative Strength Index is currently at 36.23. This reading suggests that ETH is nearing oversold territory. An oversold RSI can sometimes signal an upcoming price bounce. However, the moving average convergence divergence remains negative at -3.66, showing a bearish bias, though momentum seems to be stabilizing. Looking at an even shorter time frame, the 1-minute chart reveals more granular details. On this chart, ETH is hovering near $2,483. Intraday resistance is observed around $2,493. Support, on the other hand, is found near $2,477. These levels are important for day traders looking for quick entry and exit points. The RSI on the 1-minute chart is more neutral, sitting at 46.32. This suggests a balance between buying and selling pressure in the very short term. Interestingly, the MACD has flipped slightly positive to 0.61. This hints at potential short-term buying interest, although the overall price action remains somewhat choppy and undecided. Several key price levels are critical for Ethereum's potential future trajectory. To regain bullish momentum, ETH needs to reclaim the $2,500 to $2,520 zone. A decisive break above this area could signal renewed strength. It might attract more buyers and push the price higher. This zone represents a significant psychological and technical barrier. Successfully overcoming it could open the door to further upside targets. Traders are watching this resistance level very carefully. It is seen as a gateway to a more positive outlook for Ethereum's price in the near future. The market awaits a clear signal. On the other hand, there are also downside risks to consider. If Ethereum fails to hold above the crucial support level of $2,475, it could face further declines. A break below this level might trigger stop-loss orders. It could also encourage more selling pressure. Such a scenario could lead the price towards the next significant support around $2,400. This underscores the importance of the current trading range. Maintaining support at $2,475 is vital for preventing a deeper correction. Market participants are aware of these potential pitfalls. They are managing their risk accordingly in this uncertain environment. Market analysts are offering their perspectives on Ethereum's potential price movements. Analyst Michael van de Poppe suggests that if ETH maintains its current levels, significant price action could occur. He particularly highlights the impact of upcoming macroeconomic data releases. These releases can often inject volatility into the markets. Another analyst, Crypto Tony, has set a price target of $2,750 for Ethereum. This target is contingent on ETH holding its current support levels. If this target is achieved, he sees a potential move towards $3,000 thereafter. These outlooks provide potential scenarios, but market conditions can change rapidly. Despite the price volatility and macroeconomic uncertainties, there's a notable resilience. The inflows into exchange-traded products suggest a continued commitment from institutional investors. These investors appear to be continuing to allocate capital to digital assets. This behavior indicates a long-term belief in the asset class. It shows that they are looking beyond short-term fluctuations. This sustained institutional interest is a positive sign for the market's maturity. It helps to build a more stable foundation for future growth. The broader adoption by institutions is a key factor for the entire digital asset ecosystem. Looking ahead, the market will be shaped by several key factors in the second half of 2025. Macroeconomic events will continue to play a significant role. Regulatory milestones such as further approvals for exchange-traded funds will also be influential. These developments can significantly impact investor sentiment and market dynamics. Furthermore, the ongoing uncertainty surrounding U.S. trade policy adds another layer of complexity. Analysts are closely monitoring how these elements will interact. They will collectively determine the direction of Ethereum and the broader digital asset market. The coming months promise to be eventful.